All right, let's talk about flipping properties. This is probably the most common strategy that people are familiar with. And I'm willing to bet a few bucks you've probably watched a few flipping shows on HGTV. I know me and my wife have. And like a lot of investors, when I wanted to get into real estate investing, flipping was the very first strategy that I focused on. And I did one flip, made some money, and I have not done any flips since then. So I will talk about that in context of the spectrum and how it looks for flipping. Well, first, let's talk about the deal availability. Now, if you've gone through any flipping courses or YouTube videos, a lot of the flippers out there have their various formulas of, look at 100 properties, make offers on 20, buy one, or some formula like that. But generally speaking, going out there and finding a property to flip is very hard. So deal availability is very low. And again, a lot of this has to do with market conditions. In the last 10 years, most markets have been in a very low inventory market. Now, post the 2008 crash, there was lots of inventory, and now it's more of a buyer's market. Much easier to find a property that made sense for you. But deal availability is very low. So how do you go out there and find a deal? And I can tell you that relying on one person or one agent or one wholesaler is usually not what most flippers do. So deal availability is low, meaning it's hard to go out there and find a deal. Time. Now, the vast majority of people are doing everything themselves, or they may have, a 1 to 3 person partnership that they are working with to go out there and do it. So a lot of times they are doing the majority of work and rehab and finding the deals themselves. So it's usually a higher time side. So it's a higher time investment. Now, when I went out there and did my flip, I was the same way. I spent a lot of time searching for the deal, and luckily I actually found one pretty quick, and that was just more of I had a good network and a little bit lucky as well, but I always take luck when I can get it. But I spent a lot of time out there at the property, managing the crews. I didn't do the work myself, but I always did some work, or I was in there cleaning, but it took quite a bit of my time and also a lot of my mental bandwidth as well. Skill. I was definitely, learning a lot while I was flipping, and generally flipping takes, a higher level of skill than just going out there and painting a wall or doing some simple project. Because usually this involves more major rehab. It involves different things you have to keep in mind. So it's a medium level skill. Now for some people who are very hands-on, well maybe that works well with your skill set. You might be an amazing handyman or a general contractor. Great, you have that skill, lean into it. But then going out there and finding the deal may not be your strength. And that's where a lot of times people will do a partnership or work with other people when they're flipping. What's the risk of flipping? Well, I would put this as a medium or high risk, depending on the property type or the market conditions. There is risk here. Sometimes you buy a property, and if you don't do proper due diligence while you're under contract, your estimated rehab of $30,000 may turn into a $90,000 rehab because you overlooked, a foundation issue. Or recently what happened, a lot of flippers were buying properties because, the last couple of years, you had the market appreciation, you had all the buyers out there, which often helped anyone that was not on their budget for flipping help mitigate that because, I went over budget, but I still have 10 people that are putting offers on my property. Great, I'm still going to make my numbers work. But I know a lot of flippers, both experienced and inexperienced flippers, that kind of got caught when interest rates went from the 3-4% to the 6% because the market turned on them, and now what they expected they could sell the property for, or the ARV, after repair value, was a lot different than what they anticipated. Network. For a lot of the experienced flippers out there, having a high network is how a lot of them find the deals. It might be multiple agents, multiple wholesalers, multiple marketing campaigns. They have multiple contractors, multiple subs. So having a strong network is important when it comes to flipping. Capital. Now, some people are able to go out there and they can fund it themselves. Now, you necessarily don't need a lot of capital yourself because a lot of times you can find a hard money lender or someone to loan you money, and they'll often loan you the vast majority of it, but not 100%. So you usually have to have some capital. And again, no matter what strategy you're doing, always have reserves, always have contingent money. Financing availability. For flipping, it's pretty easy. And I actually think this is a great thing for investors to work with a hard money lender, someone that loans you short-term money to buy like a flip, but you don't use a hard money lender to buy a long-term rental, because they will often underwrite the deal, and you've got a second set of eyes, often way more experienced, looking at the property as well, and they can say, hey, this looks good, or actually, you know what, this is not a good deal. And they see dozens of properties a week, and they've seen the good, the bad, and the ugly of it. But keep in mind, flipping is a business. It is a business because you're out there putting time, you're out there putting active effort, and in the day, you're looking for a payday, a big payday. You flip a property, and hopefully you walk away with a $50,000 or $80,000 check where it makes sense for your market. When I flipped a property, I think the profit was about $22,000, $24,000. Now, over I think it was like a 4-month or 5-month time frame, that we actually flipped it, and then finding the deal before and all the time involved, I was like, wow, I made like $27,000. Well, first off, I was thrilled because actually I made money. I didn't lose it, and that was the first time I flipped, so I was just actually happy that I made money. To give you a little context on there. But when I look back and said, hey, how much time did I put into this? How much risk did I put into this? I was actually not very happy for like my dollar per hour and my risk to reward ratio. The other thing with flipping too is it's a very hard business to scale because no two properties are alike. They are in different parts of town. They have different issues. They're built by different builders or different vintages. So it's a hard business to scale in terms of like efficiency or having like the assembly line type mindset because every single property is different. And so keep in mind, this is business, not investing. You can make a huge payday, and a lot of people do. And I encourage you, if you can go out there and flip and make a great payday, absolutely do it. But if you don't have the time or the skill or the risk tolerance, I would definitely take a pause and question if flipping is right for you or not. The last thing on here is that people talk about investing. Flipping is all pure appreciation. You buy property for a lower amount, you put money into it, and you must sell it for more. That is all appreciation, and that's usually appreciation that you create by going in there and taking an ugly property into a pretty property, but your gain is all appreciation. And make sure you talk with your CPA or tax person because often those gains you get or that income you get is not taxed very favorably like other real estate investments are.